Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the markets took a massive tumble against its rival, the greenback, after the US dollar rallied to a 6-month high of 93.33. It is now assessed that the markets will tread very carefully as the fragile Australian dollar, or the Aussie, took heavy casualties and fell beneath the 75 level and printed a low of 74.47. If the US dollar does maintain its strength, then we could be looking back towards 73.75 as the near-term target, with the resistance on the day seen at 74.95. The euro slipped heavily and now pressures a support seen at 118 the figure. It is viewed that while the dollar index maintains above 93 and since posting a high of 33, the fact is that we will see further pressure on the support. Now, a break of 118 would expose a region of 116.60-65. Resistance on the day is seen at 118.75. The dollar yen broke above the 109.70 level and now looks towards the target of 110.55 to 111.25. What triggered this initially was the fact that the US Treasury yield spiked to a 3.9%, its highest level since July 2011. The bond market sell-off began after the government said US retail sales grew at a healthy pace in April, signalling the economy started the second quarter of its positive note. Relatively weak retail sales in February and March were revised higher, and another sign for firmer inflation. So therefore, if this pattern holds, we may have this year 4 potential rate hikes in the US. Nevertheless, the pattern is very strong for dollar yen, even though the RSI is a little bit overbought, but they're still looking towards the top side target, as I mentioned, 111.25. The sterling, not as weak, but still trading sideways above the 134.65 level. It is viewed that yesterday's number that British employers hire more than workers than expected for this year, which wage growth has yet to accelerate, though, according to the figures that left the Bank of England still waiting for signs of the economy to rise, rose by 197,000 during the first 3 months of this year, the most significant jump since 2015. If we do go beneath 134.65, then I'm looking down towards 133.20 region, so a further drop in the pound. Gold support was crushed at 1,300 and now questions whether the market will tumble further. Initially, the market is looking towards 91 or maybe down to a low region of 78.79. It does need to recover in the next 24 hours above 1,300, otherwise further bearishness is favourable. And ending off with oil, where we did get a rejection of $72 a barrel, and from the rejection does give further hope that we will see a decline to $66 a barrel and reassess from there. So that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.